Good morning. It is Saturday morning at 7:15 a.m. This is the 18th of August, 2018. This is Ron Brown. I'm going to take a quick look at the markets and just observe what happened this week. I'm not going to make any predictions about what's going to happen in the future because you can see this is a very volatile market. Now, when people analyze the markets, or when most people do, they tend to concentrate on the Nasdaq, the S&P 500, the Dow Jones Industrial Average, and so on. But the markets are much broader than that, and that's one of the advantages of using HGSI. We can really get a feel for what's going on. I'm going to take a quick look here at the NASDAQ. This is as of Friday. You can see that there is a VPA signal. It's a low volume test. In other words, the volume was lower than the prior day, but yet the index closed in the upper part of its range. It was down for most of the day, and then late in the day it reversed. Ostensibly, the news media reports that it was due to progress in the trade talks, but that's just a headline. The truth is that there are more buyers and sellers when the end of the day came along, and the market is still holding up, although it's been chop, chop, chop for a long time now. Let me zoom in on this. I'll get this out of the way for now. This is going back to 3 March 14th, and you can see what happened here. It has worked its way higher, and you have to say that this market remains bullish. That's all there is to it, because we have a series of higher lows going all the way up. This is now a higher low if it goes ahead and takes out the recent high. So even though there is a lot of negativity, and that's the downside of listening to other people rather than doing it yourself. It looks bullish. That is not to say that it won't reverse next week. So, use your own judgment, but for now it looks bullish. I'm going to bring this back up quickly. Click on here. We're only 1.5% away from the 52-week high, and up 26.5% from the 52-week low. Since the beginning of the year, the comp is up 13.2%, and that's the range, the daily range today, 81.5%. There was a negative gap at the open. You can see that, and then it rallied to close near its high. How do I know? Because I look at the range, 81.5. That's in the at the top of the range, or near the top of the range. Accumulation is B. These best fit trends. Long-term trend is up. Medium-term trend is up. Short-term trend is down. You can see that right here. The volume was less than the 90-day moving average. Advancers led decliners by the end of the day, as did advancing volume versus declining volume. New highs 79, new lows 46. ARMS index was it's positive, which means it was negative. I don't put a lot of faith in that anymore. But this is what the NASDAQ looks like. But really, to get a true sense of what the market's doing, you need to take a broader look, and that's where I move down my list. But before I do that, let's take a look at my Major Markets Plus folder. This is interesting. Gold was down. Gold miners were down for the week, and let's go to the gold spider, and I'll click through to the ranking module. It was down 2.23%, but on Friday it was actually up. Now I'm going to bring a chart up. I'm going to change charts. I'll just go to one of my stock charts, go to number 4, and you can see that gold has been in a massive downtrend for some time now. When it broke support in this area right here on this gap down, it never rallied again. It got up to put my crosshair on. It got up to what was support and it failed and it has just collapsed. But yesterday, you can see, well, look at this volume down here. You can see that on these gaps down, heavy selling. This could be a volume or a selling climax. Now, Anna calling what I call it a buying climax because she says, in her book, she would say that the market makers or the smart money's in here buying gold at this point with this massive sell-off and then a reversal on Friday. I'm going to move in so you can see this better. And if I click on this, look up here, you can see strengthening returning after a downtrend, effort to rise. That's what the blue circle is. So it remains to be seen if gold is going to rally from here, but it's certainly taken a beating, and there you can see a lot of fear, especially on this volume spike right here. People wanting, traders wanting to get out. Also, silver. The silver ETF was up yesterday. You can see that it shows a very similar pattern. Here is the climax, and then it was up the next day, and then here's a low volume test as volume is lower than the prior day and it closed near its high. So next week, watch gold and watch silver and see if they rally. If they do rally, it may have a negative effect on the rest of the market. It's really too early to tell, but I thought that was interesting that we're finally seeing some climatic action on both gold and silver. So where was the strength last week? It certainly wasn't in the semiconductors. If I sort on the 1 day and bring this to the top, you can see the Philadelphia Semiconductor Index is clear down at the bottom. It lost 0.7% yesterday and 2.3% for the week. Volatility index was down. The VIX, where was the strength? Here we're seeing on the 5 day compared to the 1 day, the gold, silver, and the the GDX, the SLV, and the GLD comparing 5 days to 1 day. Small caps were actually pretty strong. They've been strong. The NYSE composite slightly positive. Mid caps were positive both 1 and 5 days. Oil was up slightly yesterday, the oil fund, but down 2.8% for the week. Now, looking at the broader markets here, you can see the NASDAQ was actually down slightly for the week. The TLT bonds were up, were slightly positive. And, well, here, let me just flip through to the ranking module. I've got this on percent change 1 week, so this is just a quick way to get a read on what happened over 5 days. The utilities continue to be strong. We know the industrials are strong this week. Walmart really helped on, I believe it was on Thursday. Transports are up here. Here's the small cap. Here's the mid cap. The S&P 1500, the 500, the 100. These are all positive. But as I get down here, you can see that the NASDAQ 100 was slightly negative, and the NASDAQ composite was also slightly negative. So this tells me, or tells us, that techs are out of favor right now, and it's been pretty evident. Now, not all techs, of course. Look at Apple. It's out to a new all-time high. Money is flowing out of stocks like Netflix, so Tesla had a bad week. I believe Facebook did not do well, so it's really a mixed picture. And you know, it's very tough right now especially for people that are trading, hoping that the semiconductors go up. And Nvidia reported earnings. They reported very good earnings, but their outlook was supposedly negative, and it really hurt the semiconductors. Okay, I'm going to go down. Let's take a quick look at the major market ETFs. The natural gas fund. See, we get a different look here because there are some different ETFs in here. Natural gas, the China Large Cap Fund. These are up for the day. How do they look for the week? You just click through here and you can see consumer staples. Sector was good. The utilities keep appearing. They're very strong. Healthcare was good this week. The industrial sector was good this week. Where was the weakness? Solar, really weak, down nearly 5%. And the energy sector did not do well. I'm going to move on down. Let's go on down here to the spider sectors, now folder number 9. Click through to the warehouse, and here we go. Consumer staples, utilities, healthcare, industrials. This eliminates a lot of those spider ETFs that I have in that other folder, and we can really get a feel for what's going on in these individual sectors. One of these, I put the SPY in here to compare what the ETF, which represents the S&P 500, how it compares to the other spiders, and you can see that the SPY is at number 6, up 0.67 for the week, and these are the sectors that are outperforming the S&P 500. This is just for the week, though. It's set on percent change 1 week. Now I'm going to go to my number 4 folder, the broad market indices. I'll put these in both the warehouse and the ranking module. And this is a broad look at all of the indexes that I compute in HGSI. And once again, utilities, consumer staples are near the top. Transportation, utilities have really been on a tear, as you can see. I'm going to make some changes here. I'm going to go back up to my market. I'm sorry. I want to go to my number 3 folder, the HGSI indexes, and I'm going to take a longer term look at this. This is the Dow Utilities. Look how this index has been on the rise. Look at the accumulation in this index over time. If I change to it, you can see that it's a very small index. There are only 15 stocks in here, but boy, has it done well compared to a lot of the market. Like I mentioned earlier, generally when analysts look at the market, they look at the S&P 500 comp or the Nasdaq and the Dow and so on. But the true picture emerges when you get into these broad market indices and see what these individual sectors are doing. Consumer staples was not so good, but look, here is, I'll put my crosshair on, beaten down, and then you can see the strong accumulation coming in as the A's moved up, and that was the beginning of a decent run. Now, accumulation has fallen off here between the A's and E's, of course, but the trend in recent months has been up for consumer staples. Where has the real strength been? Let's put this on. I'm sorry, I'm going to change something here. I'm going to go just put it on relative strength, and I'm going to lengthen this out. Let's go to Ian Slow, which is based upon 6 months, but 70% of the emphasis is on the last 3 months. So looking at consumer staples, now I'm going to flip back through to the ranking modules. If you click on the chart and click on the ranking icon, it'll take you right to it, and you can see the consumer staples with Ian Slow with 70% of the emphasis on the last 3 months, and here's 1, 2, 3 has moved up to number 7. Where is the strength within that index? If I click on this, go right mouse click and go up to the top. I should have just clicked on my home button, but I didn't. You can see that natural grocers. Here's the last 4 months with this. Look how this stock has moved up. That's where the real strength has been. This is a $1.90 stock, but the ranking module doesn't care about price, and look how this has moved up. This is increased from here 100% essentially. This gap and then the reversal, then it stabilized and took off. Super value. This is a buyout. Core This was a $19 stock. Now it's a $34 stock in 2.5 months. This is the advantage of looking at the market top down. Now, look at this. Yes, it's moved up. Here's a negative VPA flag, but what do we have here on Friday? A low volume test for supplies. So even though this is an extended stock, it does not look like it is being sold yet, because a little profit taking, and then by the end of the day it closed in the upper part of its range. Just out of curiosity, I'm going to click on the designer. I'm going to type in CORE. I'm going to click on this little folder over here, which goes over to these groups and tells us what ETFs are holding this stock. Look at all these ETFs that are holding this, and going down to the user groups and the smart groups. I'm looking to see if when it appeared back in May, it appeared in the stocks and groups down, but then it started appearing in the top raw combo stocks on the 14th of this month. So it really didn't appear, but look at all these VPA signals that were generated over the months. Now, this is interesting. I don't know how many of you know this, but you can right mouse click on a chart and you can edit. Just a sec. Okay, let me try that again. I want to edit or indicator reports, volume price analysis. Yeah, I just overwrite my HTML file. And what happens is this volume price analysis indicator report pops up for Core Holdings, and it tells us all of the VPA flags historically. So let's look at the last month or so. Test for supply today on the 16th, the day before. There was a high volume down bar on the 8th, the transfer of ownership, 8.7 effort to rise, so that was 10 trading days ago. Before that, there was a test for supply and so on. So you can get a history of the VPA flags. And this was trending up, obviously. Here is a test, and then here's the effort to rise, probably on earnings, and here's the other VPA symbols. Now let's go to a different chart on this. I'll just go to my number 1 chart, because I wanted to see where the pocket pivots occurred. There's up and down pocket pivots. Here's a blue one, several blue ones here, and you can see that the 3 was above the 6, exponential moving average most of the time. This is expansion contraction, and the 18 remained above the 50 from this point on. Several potential entry points on the volume point of control, this green area down here. There are a lot of names in here that are familiar that have been popping up. 5, SodaStream, Boston Beer. Let's take a look at soda. I'll move in closer on this. Wasn't anything going on until earnings came out. Here's an effort to rise, and there's an upper wick here, so consequently you get a couple of 2 signals that are contradictory, but you can see that it gapped down but just kept rising. So from this point to this point after the close, if I do an alternate A to bring this up and select these 2, I can measure from this close to the current close, get an approximation here. It's up another 18% since this huge move here. So these are tough to take, because it's a high risk entry, but you can see that the demand is overwhelming the supply. look at this volume crescendo here, and then it, it slows down. But volume was certainly confirming the price move. Once again, if I do this, right mouse click and indicator reports, volume price analysis. If I want a printout of this, I can get the dates with the VPA signals on them. Okay, so I'm going to go back to this with my broad market indices, and I'll click through to get these into the ranking module. So where is the strength? Well, the long-term strength is in the small cap 600 index. If I click through to this, you can see that this is being confirmed by the short-term strength. This is the percentage price change 1 day. The small cap index was up 0.5 on Friday and up 0.8 for the week. If I look over here, you can see that's B accumulation. It's up on these best fit VPA trends, and the fan is up also. It is positive on the VPOC. This is green over here, so let's just take a quick look at the S&P 600. I'll go back to my HGSI index charts. I'll go to a long-term look here, and you can see that back here, the coming off of this pullback, that the accumulation suddenly became very strong as volume increased and the price started moving up, and the A's pretty much stayed above the E's, but this is A and B versus D and E, and this has stayed positive. Looking at these charts, it's really hard to be bearish. Let's go down here. Let's look at the NASDAQ 100. Now, this looks a lot more bearish, and we know that a lot of the techs are having or had a tough week. Now, look at that strong accumulation here. Now that the A's and B's have actually dipped down or are in the same area as the D's and E's, and the E's have gone above the A's here, and the accumulation has gone from B to C, so it's neutral. So weakness there. Let's look at the financials. A real mixed bag on the financials. They have come together. Let's look at the all NASDAQ. Same thing here. Let's look at the energy. Well, this has actually gone negative as energy has had a bad week. It's really fallen off, and you can see that with the accumulation. I guess what I'm trying to say here is that all parts of the market are not equal, and you really need to look at the different sectors. And one good place to do it is look at the broad market indices, and in the short term and the longer term. So this is E and slow, which is longer term. This is short term. Small cap 600 has been strong long term. Has had long term, by long term I mean the last 6 months, with 70% of the emphasis on the last 3, and has so is the Russell, and we saw that the utilities are strong. Let's compare this to the materials, which have been weak. I'll click through to the warehouse. Where are the materials? Well, they're showing some strength this week. It's at the top of the list. So what we have to do, we have to bring the chart up. But you can see that it has not been good for this sector. The distribution levels are at extreme levels here. If you look at this and go back here, you can see that the materials, once they get up in this area, have a tendency to try to come back. And what do we have here? We have a low volume test. I'll zoom in on this. You can see that there was buying in the materials yesterday. So if I want to potentially find some trades, or at least some accumulation, I'll just use view number 4 in these stocks. I changed to the material stocks. I'm going to make this full. I'm going to click on here. I'm going to the end of the day, VPA, there was a flag today in these material stocks. I'm going to sort on the last VPA signal condition. You can see there's a lot of tests here, a lot of strength returning. This 0 means that there was a VPA flag today. Let me take the filter off. We're getting 98 VPA flags. That's both positive and negative. If I take this off, there's 298 securities in this group. If I reapply the filter, cuts it down to 79, and you can see that there are a lot of bullish signals in here. Now these would be the strongest, the effort to rise. So let's just take a look at some of these stocks, and this is a strong stock in a weak sector. Here's the effort to rise. Let's look at the earnings are out on it. Had a good quarter compared to what they've recently had. This is non-wood building materials. Look at this, a nice chart here. Here's an effort to rise. Never really did challenge this gap down here. So there is strength. You'd be buying strength here. Here's another one. I better take a longer term look at this. In fact, whoops, I didn't want to do that. Let's do this. I'm going to load a program here. Going to open up a new window. Going to go to my end of day charts. The charts are duplicated both in end of day and intraday. And I'm going to go down to my basic end of day charts. This is a new chart I've put in. You can download these charts if you want them. And okay, this is Louisiana Pacific. This is a weekly chart compared to a daily chart. You can see that this stock has been chopping around. This is its relative strength compared to the S&P 500, the NASDAQ, or the small caps, and it's turned up on all of them. I'm going to give you a longer view here, but you can see the chop here. A stock like this can drive you crazy. It's certainly been for short-term trading, it looks like, but on the weekly chart, it was moving up, and then you can see the weekly chop here, which you can also see over here. So I like to look for tighter charts than this. Here's a tighter chart. This is the Carlisle Company. I'm going to take this down here and double click and put it in place. Here's the Carlisle Company. Here's the weekly chart. Was going down, but now it's starting to outperform the indexes. Look at these really good tests for supply. This is an excellent flag to screen for, the test for supply. Big move up probably on earnings, and then it is taking off. This is the one I think I looked at first. Let's go back here. Yeah, Carlisle. I wanted to show you what the weekly chart looks like. Now here's a relatively new stock. Look at these excellent VPA signals. Now, it did go down after these negative flags, and then here's that low volume test again, went up. No VPA flags here, but it's holding right at this gap, and we had an effort to rise yesterday. Agricultural chemicals, you can see that their earnings probably worth putting in a watch list. Let's look at another effort to rise here. You really need to look at these weekly charts for perspective, and the weekly charts all have the VPA flags on them too. Here's an effort to rise 3 weeks ago, and it's followed through some. Well, here's this would be 1, 2. No, I don't believe. Well, from here to here this week, is appearing over here. But the long term gives us a totally different perspective on a stock or an ETF. This one looks good. It held in here, mostly closed in the upper part of its daily range, and then we had an effort to rise. And look at this growth. The earnings are out. Basic and diversified chemicals. Quick add to group. This is from the 17th, so I'm going to choose watch list. August, new, 2018, 0817. I'm going to put this one in a watch list for Monday. Okay, now I'm going to go to chart number 6 because it contains the group. Now you can see the group is still kind of chopping around, but this stock is a relative strength of 91. And, you know, I look at the earnings turnaround here. Next quarter, strong earnings predicted also. So this is RYAM, Rainier Advanced Materials. And here's another effort to rise. Look at this flag here, and it's been holding really steady. Trex. I'm going to add this one too. Let me go back to that first one. You know, this is a decent setup also, and it's starting to outperform. I'm not recommending these stocks. They're just going into a watch list. This one has resistance over here. You always want to look to the left. This one looks decent too, and so on. Anyway, I've gone over 30 minutes. I don't want to go any more. You get the idea, but you can clearly see the advantage of HGSI and going from the top down to see where the strength is or where a possible reversal is, and that's what I'm looking at now. The reversal is in the sector, but the stocks that have been coming up have been strong stocks for the most part. So leaders will continue to be leaders if this materials group follows through and starts gaining momentum. Thanks for listening. Have a good